Hello, everybody. Welcome. This is my intermediate accounting 18th edition exercise 7-22 walkthrough. Textbook authors are Don Kiso, Jerry Wanyant, and Terry Warfield. The question used in the presentation is copyright 2022 by John Wiley and Sons. All rights are reserved. This is for educational purposes only. The video may not be distributed or redistributed without the express permission of Wiley. You know, I say it's for educating. I don't know what else it would be is to try to get through these questions, but my solution presentation is copyright 2022 by Bennett Tchaikovsky, all rights reserved. The opinions contained within this presentation are those of Bennett Tchaikovsky, not the authors of the textbook or of Wiley. Okay, so before I say thank you to Wiley, the one thing that I've been going through and doing as I've been updating to the 18th edition from the 17th is going through and seeing which questions are different. Well, there's very, very few of them which are actually different. They just changed the years from 2020 to 2025. So here we've got dollar value LIFO presented as the information related to Dino Raja Company. And really what we're trying to do here with dollar value LIFO is that, oh, we're in a period of inflation, right? So our value of our inventory may be going up. And if we're using LIFO, which is last in, first out, what we're going to kind of go through and do is we're going to basically go through and take some extra hit, an extra hit to cost of goods sold to basically, if there's a liquidation, meaning we start going through the older inventory that's at a lower price, that the impact is going to kind of be somewhat, I should say, measured. So, but aside from all that, let's go through and kind of look at the mechanics on how to do these questions. So when you get a dollar value LIFO problem, they're always going to start you with a base year, and this is really, really important. So the base year price is 80,000. The index always for the first year is going to be at 1. And so the inventory at base year prices is going to sound kind of moronic, but it's basically at 80,000. Okay, so the first year is always going to look like this. This is going to be at 1. So under dollar value LIFO, I take my base layer times the index. I get 80,000. My total inventory under dollar value LIFO is 80. And then I don't have a LIFO reserve at the end of the first year. So this is my base inventory layer. And now I'm going to go through and add on to this. So in year 2, or as of December 31st, 2023, my ending inventory is now 115,500. However, the price index when compared to the prior year is now at 105, or it's 5% higher. Does that sound like something that's happened recently? Well, here we go. We're going to have 115,500, 115.5. Now, to make this comparable to my base year, I'm going to divide this by 1.05. When I divide this by 1.05, when I compare this number, this is now comparable to the 80,000. So now what I'm going to do is I'm going to say, okay, what have I added on comparing this number over here to this 80,000? Well, I still have my base layer at 80,000 and my index is at 1. But over here, I've added 30,000, right? Or 80 plus 130 is 110. Now for the index though, for this new layer I added, I'm going to go ahead and use 1.05. Okay. So my inventory under dollar value LIFO is going to be 80,000 plus 30,000 times 1.05. Now, when I do this, what's going to end up happening is my dollar value LIFO total is going to be 111,500. Under dollar value LIFO, this is how I have to go through and basically record my ending inventory. Now, the question is only asking you to compute this, but we want to do more stuff because that's what we like to do. This is the value of my ending inventory, but it's right now under dollar value LIFO, but right now it's on my books at 115,500. So the reserve I'm going to need to make is going to be 4,000, right? So this LIFO reserve is essentially going to be like a contra asset inventory account, which is going to take my inventory that's on my books down to inventory under dollar value LIFO. So how do I go through and do it? Well, I'm going to have over here inventory. So my inventory as of 2023 was 115,500. Didn't put in 2022. I guess I could, but it's really kind of not that relevant. There's no dollar value LIFO reserve. But over here, I'm basically saying like less my LIFO reserve. Okay. So over here, this is going to be less this 4,000. Okay. So now I'm showing over here 115,000. So what does this look like on my books? So to go through and to make the entry for this, what I'm going to go ahead and do is I'm going to debit cost of goods sold. Remember, this is a contra asset account. It's going to reduce the carrying value. So I'm going to go over here and credit this for 4,000. My inventory reserve at the beginning of the year was 0, right? I didn't need one because this was my base year. Okay, but over here, I'm adding on 4,000. And over here, my ending inventory reserve on 12/31/23 is going to be 4,000. Now, before we go to the next year, this 4,000 at the ending basically becomes 4,000 at the beginning. Cost of goods sold is an expense. It's going to get closed out to retained earnings. Like other contra asset accounts, this is going to continue to carry forward. Okay, let's go to the next year. So my inventory here is 108 and the price index is 1.2. So to make this 108 comparable with the base year, I'm going to have to divide it by 1.2. So over here, this is going to be 108,000, 1.2. And so here, my inventory at base year prices is now at 90,000. Now, when I look at this at base year prices before, this was at 110. So my inventory is actually going down. Now, in terms of, so I'm not going to add a layer, rather I'm going to take away a layer. When we take away layers, we're doing this under LIFO. What does LIFO mean? It's last in, first out. So I'm going to take over here, I'm still going to have my 80,000, but I'm going to take 20 off of this. So this is now going to be at 10,000. So whatever I come up with over here, this number has to equal basically whatever I'm coming over here is with my layers. Now, remember, again, we're reducing this. So the amount is going to end up being, we're going to take away from this. Why this one? It's the most recent layer, last in, first out. Okay, so my index, I'm just going to pull these from the previous ones before. And I'm going to get 80,000 and then 10,005. Okay, so my inventory under dollar value LIFO is going to be 90,500. So the amount of the LIFO reserve that I need is going to be 108 minus 90,500 or 17,500. Okay, so the ending balance in my LIFO reserve, let's go to my balance sheet. So my balance sheet for the inventory is going to show 108,000. My LIFO reserve needs to be at 17.5. And this way we're showing the inventory here under dollar value LIFO, right? This 90,500 right here. Now, again, this question didn't ask for this, but this is something I do on my exams. I love this stuff. So over here, right, the ending balance I need is 17.5, right? On 12/31/24, the total amount of the reserve that I need is 17,500. but I already have 4,000 in here. So my adjustment for the current period is 4,000 plus what gives me 17,500. So I'm going to adjust this by 13,500. So my entry, when I come over here to record it, this is going to be 13,500. And over here, this is going to be 13,500. So that's my adjustment for the current year. Remember, the ending balance here tells you what you need in the reserve, right? If I already have something in there, then my adjustment is going to be whatever I need to do to get from 4,000 to 17,500 or those 13,500. Now, for the following year, my ending balance here becomes my beginning balance in the following period. So let's go ahead and take a look at this one. So on 12/31/25, my balance here is 122,200, and my price index is 1.3. So let's go ahead and put that one in. Okay, so when I divide this through, I'm getting 94,000. Well, guess what? Comparing 2025 to 2024, I've added 4,000. So I've added a layer. So right over here, I've got my 80,000 that's still going to be at 1. I've got 10,000 that's going to be at 1.05. And now I'm going to have 4,000 that's going to be at 1.3. Okay. Okay, so my inventory, so again, let's just kind of take a look at this. When I take the 122,200 to make this comparable to the base here, I have to divide it because the prices have gone up by now by 30%. So over here, right over here, 94,000. When I compare 94 to the prior at base year, I've added a layer. So I'm going to put this 4,000 down here. I don't change. I don't add back. Like once a layer is gone, so like once we took 20,000 out of this, it's wiped out. So over here, I'm now going through. I've got 1 at the 80,000, 1.05 at the 10, and 1.3 at the 4. So over here, my inventory under dollar value LIFO is going to be 95,700. So if this is what my ending inventory needs to be on my balance sheet, and right over here, and my beginning and my inventory pre any kind of adjustment was 122, then the amount I'm going to need for my reserve is going to be 26,500. So over here, we've got 26,500. And now with this, I'm going to take this. Well, what does my ending balance need to be as of 12/31/25? Well, it needs to be over here at 26,500. So the adjustment I need to do to get to my ending balance is going to be $9,000. So my adjustment here for 2025 is going to be $9,000. Okay. Let's now go through and take a look at the next year. So hopefully this is getting a little bit easier. 2026, we've got 154,000 at 1.4. Let's see if we added on any layers. So we have 154,000. My index is at 1.4. And so over here, the value of my inventory at base year prices is back to 110,000. So how much should I add on? Well, if I compare the 110 to the 94, I added on 16,000 more. So what was there before is not going to change, but now I'm adding on another 16,000. This has to equal over here to the 110. So this is going to be at 1. This is going to be at 1.05. This is going to be at 1.3, and the new one is going to be at 1.4. So when I go through and do the extension, okay. Okay. All right. So my dollar value LIFO, I'm going to add up these four values. It's 118,100. So over here, my LIFO reserve needs to be 35,900. So what I'm now going to go ahead and do is say, okay, well, my beginning inventory here was 154. I'm going to go ahead. My LIFO reserve is going to be 35.9. So my ending balance is going to be 118,100, which is what I need to go over here to show that this is going to be under what this is going to be under dollar value LIFO. Okay, now for the fun part, when I hopefully this is kind of making a little bit more sense. On 1/1/26, the ending as of 12/31/25 becomes my beginning for the following period. My ending balance as of 12/31/26 needs to be right over here at 35,900. So what do I need to do to get from here to here? I'm going to need an adjustment for 9,400. So for 2026, my adjustment over here is going to be for 9,400. Okay, so we need one more year of an inventory reserve. And let's see if we can make this work. Okay, so this is going to be 1/1/27. And so let's go ahead and start up. Okay, so 12/31/27, we have 176.9 at a 1.45. So to make this comparable back to my first year, I'm going to have 176,900 at 1.45. Okay, so I compare this number here to this. I've added on 12,000, right? So over here, I've added on 12,000. So what I'm going to go ahead and do is I'm going to go ahead and bring down what I had before. I'm going to go ahead and add this 12,000. When I add 12,000, this now equals 122, which is what I want. For my price index, I'm going to use for the 12,000, I'm going to use my current year price index at 1.45 over here. Okay. So now my ending inventory under dollar value LIFO is going to be 136,500. So my LIFO reserve that I need is going to be 176.9 minus 135,500 or 41,400. So here on my balance sheet, I'm showing inventory at 176.9, but under dollar value LIFO, it needs to be 135. So I need a reserve of 41,400. Now, coming over here, when I get to this coming year, my ending inventory reserve needs to be 41,400. This needs to be at 12/31/27. So over here, when I come over here, I've got 5,500. And over here at 5,500. Okay. So as we go through and look at this now, we got 5,500 over here. And so we're good to go. So every time I do the journal entry, remember, when I'm doing the journal entry, I have to keep in mind that these are, it's kind of like the allowance for doubtful accounts, right? You've got this amount that's reducing receivables, but when it's carrying over from period to period, I need to basically be very mindful of in terms of, how I go through and record it. Just because if there's a prior balance, that this is not going to get closed out. This is a contra asset account. So that's kind of the problem here. I want to thank you for joining me here today. I did decide to redo this question just because in the other video, the years were getting really funky. I think it started at 2016. So because if you can look at this here, yeah, it's like, so it was showing these were the numbers like 2017. So I know that when you guys see those things, you're like, what the heck are you, what video are you making? So in any event, I want to thank you for joining me here today. And I look forward to seeing you on the next video. Have a great rest of your day. And I look forward to seeing you soon. And again, a huge shout out to Wiley for allowing me to make these videos. Have a great day.